Today's video is on KLIP and OARK. There are two important developments happening with these funds today that I think you should be aware of. It's funny, someone just commented on KLIP asking if I own that. Yes, I do, and I made a video on KLIP. And if you guys ever have any questions on some of these topics that I bring up, whether it be cornerstone, drips at the NAV, or margin, or other high yield funds, or other bond funds even, let's say GOF or just any other bond fund, really, I get a lot of questions on. Go see my past videos, check out my wall. I think you could spend a lot of time there and have a lot of your questions answered. But if you have any other questions, please feel free to email me anytime at aikentodd48@gmail.com. So we're making $119,000 in dividends per year, but this is off by a month. I'm really making closer to like $110,000, $112,000. So and we're also down 9,000 for the day, almost 10,000 for the day. Am I worried about this? Well, not really, because I'm down 1.58%, whereas the market itself is down 1.56%. So I'm in line with the S&P. The Nasdaq's down 1.3, the Dow's down 1.5. So I'm in line with the markets. Yes, it hurts, but that's what happens when you're playing with scale and larger accounts. And yes, margin. So the 119,000 that you see there in dividends, let's just call it 100,000 in dividends I make per year. That's going to pay down this margin in less than 3 years, this 240,000 in margin debt. So I'm not advocating margin here. I'm not saying to use margin. You should buy all these funds that are 4 and 5 star rated, like Cornerstone and GOF and the other ones that I've covered, BDJ. You should buy these regardless. They pay you a dividend, a nice dividend, and they help you get ahead in life. Again, 70% of Americans are paycheck to paycheck. I have to state this. It's probably going to be my call to action on every video, and 80% of people are unfulfilled at their jobs, and I just know this. So 70% of people are paycheck to paycheck. How are they getting ahead without loans? So I use margin loans to get ahead, and I use my margin, which is 5%, and allows me to travel the world, buy houses, buy cars, buy food. I can do anything I want with this margin debt. I can take this and go buy some food. Again, I can sell these positions at any time and my margin's gone. So anyway, it's like the best way to live life, in my opinion. I tie this to my checking account. So all of my bills and everything come out of my E-Trade account. It's all automated. All of my bills, everything you can think of just comes right out of here. I first pay my bills through my credit cards that I get points on, and then the credit card bill is paid out through this margin each month. That is automated to my credit cards. So I get those points as well, and that's how I also get a little extra money each month. So anyway, I sold KWEB for that $300 loss, okay, and I bought 1,000 KLIP because I'm down in the position in KLIP. I'm down 5%. I had only 95 in the position before, and I rebalanced it to a little over 10 now, because if I took a $300 loss in KWEB through closing those puts that you saw earlier on past videos, then I get to make that loss back with a 50% dividend through KLIP. 50% dividend, $1,000 that I invested, that's $500 in income. That's also why my income jumped to this number that you see, 119.5, which again is off by a month. So that's because I added 1,000 to KLIP. The 500 in dividends from KLIP will more than offset this loss from KWEB. Plus, I didn't want to have two of a kind. If you have KWEB and KLIP, now you have two of a kind. If the funds are falling, if KWEB is falling, then both are going to hit you hard, and so you don't want to have two of a kind. But also, you want to buy back as soon as you take the loss from KWEB, like I did. I bought back KLIP immediately, so that even if we go lower, that's fine. It's better than being in KWEB that doesn't pay you a dividend. But if we go higher, then I don't get any NAV erosion from selling out of KWEB for the loss and then getting, and as it moves higher, my account never bounces back with it. At least my account gets to bounce back some as I buy back KLIP immediately. So I get some capital gains through KLIP on the bounce back, hopefully, but if not, the dividend of 50% will cover everything else. And then for OARK, the dividend X date is approaching. So if it's anything like last month, OARK's dividend should be around the 4th or 5th of this month. OARK again has a 40% dividend. Go see our past video on OARK and KLIP again if you want to see more on these funds. but the X date was 4/6 for last month. So this month, I'm assuming it'll be around that time frame. You can go to the Yield Max website and see for yourself the dates that they declare for their dividends. But as you can see here, distribution, you know, these are the past X dates, but I'm not sure what the future X date is. It's probably on here someplace. I don't really care. I just know it's coming up soon. So I simply buy now and just and I'm doing it on the weakness today. The KLIP is down just like OARK is down today. So buying on the weakness makes sense. And so I went ahead and did it now before the X date, so I'll qualify for that dividend, because you have to be in the fund before that X date to receive the dividend. I think all the Yield Max funds have their dividends approaching, including Tesla, which we made a video on yesterday. See that video. Go to my wall if you missed any of these videos. So that's how I'm making back the loss in KWEB. I'm just buying KLIP, another 1,000 of KLIP, even and it was down today, and also 10,000 for a risky asset like KWEB is not too big of a risk for me, because I keep my riskiest funds at 5,000. I keep my stocks at 1,000, my riskiest funds at 5,000, and then here are the stocks I keep the riskier funds at 5,000 and the second highest degree in risk at 10,000. And yes, I know that I have some other high quality funds here like PTY that are not high risk, and I have them at 10,000, but they only have 10% dividends, so that's why I don't have as much in a PTY. Riv has a nice dividend, but it's a little volatile. I do need to get my positioning up in Riv, but to be honest, now that I've come across these Yield Max funds, the dividends are so much better that I don't like to waste my time with these lower yielding funds. I have bigger fish to fry now, as they say. So anyway, our performance and value, I think I already showed you, but we're up for the year 19%. The Dow's up 2, the S&P is up 8, the Nasdaq's up 16. So this strategy of using margin has been paying off for the year and over a 3-year time frame. As you can see, we're up handedly over the market, over 100%. So the dividends that we receive, it's going to pay back the margin once again. I'm not advocating margin. I am writing an e-guide on these on this topic of margin and how to live off dividends. I have a volume 1 and 2, but I'm in the process of writing the third. If you're interested in that, please email me again at akintodd48@gmail.com. I was thinking of doing 100 for all 3 volumes plus a phone call. So that'll be something I think I'm going to offer, just because I can't handle all the emails now. But even though I'm flattered and just overwhelmed by y'all's generosity, and I love the comments, please keep those comments coming. I'm learning so much, just like you are. I'm also learning a lot. So anyway, it looks like E-Trade's messing up on me now, as you see down there. I can go ahead and close the video out now. I think those are the 2 important updates for OARK and KLIP that I did in the portfolio, or that are going to affect my portfolio. I just want to bring it to your attention. Leave comments in the section below if you want me to cover anything else, and I'll talk to you soon. Thanks a lot.